Now, our stock of the day, we're taking a look at one of the top performers in this morning's session, Regis Resources, the Goldie. In fact, recording total gold production from its record gold production from its Duketon and Tropicana projects in WA for the June quarter. Full year production climbing 17% to 437,000 ounces, which falls within its previously set guidance there, though its all-in sustaining costs are typically slightly above its cost guidance there. They're up to $1,500 an ounce. Looking ahead, it says it's now well positioned for increased annual gold production into the new financial year. So as I mentioned, their shares at one point they're up around 11%, pretty much in that range at the moment, in fact. So, Mark, we looked at gold stocks. In fact, Evolution, what was it, last week? Where it plummeted and took a lot of the gold sector with it, given it had to readjust its production forecast. So we'll first get your view then on Regis, but more broadly, the Goldies.
Gold's not something Teaminvest gets involved in. So, I mean, I can have opinions on it, but it's not. We don't really invest in the sector. We don't generally invest in commodities because they're price takers. But gold has been one of the few areas that have held up, if you like, through all these drops. So, I mean, a lot of people were expecting gold prices to go up substantially, and they haven't, but at least they've maintained their value. So that, in this environment, that means they've outperformed significantly. It's hard to imagine gold being under threat to go down much over the next few years with all the inflationary pressures and the rampant money printing and recessions and all those things all should be good for gold. So I'm not predicting anything on prices, but investing in miners has always been a leveraged bet on gold. So, you know, if you like gold prospects, or if you're looking for somewhere to find some safety, in inverted commas, then some gold mine is probably a good idea. If that's what floats your boat. I've got Northern Star in my portfolio, which I've had for years, and I've done very well on that, although they've become a much more complex business now than they used to be. Regis, talking about Regis, I mean, looking at our filters, its return on equity and return on capital are below our minimums. Other than that, it passes everything else, and so it's a negative, really. It doesn't pass. So gold miners can pass, by the way.
Yep.
We're agnostic from the point of view of analysis of what the company does. And in fact, when we looked at Northern Star originally about probably 10 years ago, you looked at it and thought, what a great business. Steadily increasing earnings, linear, paying good dividends. This was not a gold miner. Because gold miners didn't do that in those days. Until you knew what it was, you'd say, what a great business. What do these guys do? They're a gold miner.
But what if you speaking of Northern Star, since it acquired Saracen and took control of the super pit, what have you readjusted then?
Not really, but it doesn't. It's not a Teaminvest company. I've still got my shares.
Right. Okay.
So I haven't sold them.
All right. So if you hold Regis, what would you do with it?
I think I'll pass on the opinion.
All right. Okay.
Rudi will know better than me.
Yeah. Okay. Rudi.
Starting with your last question, if you hold Regis, you're probably now still a little bit crying about the losses you've had by buying it before today. I think today's share price response to a large extent is explained if you take the share price graph over the last 2 years or so. I mean, it's going down. I think the most important news that you had on your summary is the increase in costs. And that's what has dogged Oz Minerals, Evolution, Dacian Gold, Zimbabwe, you name it. And it's obviously going to dog the sector. So why I disagree with Mark is I wouldn't be adding gold miners here, for the simple reason that you take on the company specific risk, and we are in an inflationary environment, and people often interpret that too simplistically in the terms of like, oh, gold should benefit inflation, and that's not true. Gold is in this bear market is the Stephen Bradbury of the financial assets. When everything falls and gold holds up, gold wins, man. But it doesn't mean, I don't think the prospects of gold here are fantastic, but it holds up. And there are circumstances when that's enough to win and to be happy about having exposure to gold. So the other thing is I can add is I'm a big fan of sorting out the quality from the non-quality, and this is non-quality.
Right.
I mean, with quality, you're more in the direction of an Evolution mine or Northern Star. Newcrest, maybe. This is not quality. So, and non-surprisingly, Costs are going up, and that will determine the sector. And the only reason why the share price goes up today because it has already fallen so much. For other companies, that may not be the case, and then the share price won't be respond as far favorably as today.
Well, I'll take that as a pass then as well, shall I?
You know the barge pole.
Yeah.
As far as it reaches.
All right.
Circle around it.
That's an avoid.